there's another question we get asked a lot. I'm going to throw you an easy one here, and then we're going to tackle the real fun one as our third one. But the easy one is one of the products we use right now. When we take loans, we get to pick whether or not we have a fixed interest rate or a variable interest rate, and it's pretty unique in the business that we get to make that choice. We can change down the road. Every loan we get to pick that. One of the common questions is now, why on earth would I pick a variable loan? Because my consumer brain is averse to that, because I perceive that as risk. Jim, can you just explain to our listeners the difference between a variable and a fixed rate loan, and what we are seeing and by and large advising our clients to do right now?
Absolutely. So that really comes down to a variable loan versus a fixed loan comes down to the direct recognition versus non-direct recognition conversation. So in a direct recognition policy, you have a fixed loan rate, but the loan is recognized in the policy, meaning that they're going to reduce your dividend, right?
Right.
And that reduction comes from the loan rate. Okay. So it's always there. So there's companies that recognize 50 basis points. There are companies that recognize 75 basis points, and so on.
Okay.
So if I want a fixed rate, then I'm going to have direct recognition. Okay. Now, Nelson always said that this doesn't matter because, again, Nelson was trying to say the policy is not the focus, the process is the focus. Your behavior is more important than the policy. Okay. Which I wish some of these people on the internet would please listen to that, but they won't.
They're just trying to turn a trick.
They're trying to turn a trick. So in a variable loan, then it's non-direct recognition, okay? Which means you can take all the loans you want. It doesn't affect your dividend, okay? So then you think, but what if interest rates go up? Okay, if interest rates go, and let's say that company's paying, I'm just going to use an example, 5%. And let's say that company's paying a 5.2% or 5.3% dividend. Okay. If interest rates went to 7, guess what would happen to dividends?
I would think it would go up.
Absolutely. What do you think is going to happen to loan rates if there's a 2% guarantee instead of a 4?
I think it will probably go down.
Right. But there's always going to be this relationship.
Correct.
Right?
A delta.
And again, remember, the policy is not the issue. So there's only 2 companies out there that give you a choice. If I couldn't have a choice, then I would choose non-direct recognition. By the way, do I have direct recognition policies? I absolutely do. Am I worried about the recognition? No.
Nope.
Because I'm making so much return on my assets and my behavior that my money pool is, again, think of the rates of return that we have. I know this isn't part of the question, but we have the rate of return in the insurance contract. We have the rate of return from the cash flowing assets that we're buying. Right. We have the rate of return on the interest that we're saving. Okay. We have the rate of return on the lost opportunity cost that we're recovering. And then we have, if we're buying cash flowing assets, we have another rate of return, which is rate of cash flow or rate on cash flow, whatever way you want to say that.
Right.
And then in addition to all of that, we have the legacy rate of return, right? Because someday somebody's going to get a bingo when I graduate from this world, right? And, my kids probably won't be yelling bingo, but I wouldn't blame them if they did when they get the check, right? I stole this, but I always say to my wife, try to look sad at the funeral, right? I mean, if you get the check before the funeral.
I tell people, hey, listen, with Mare, she does not need money if something happens to me. She needs help getting the yard mowed and taking care of the physical structure here, but by golly, do not give her money.
That's right. So variable versus fixed. My first choice is having a choice. My second choice is variable non-direct recognition.
Yep. Hey, and here's the great thing. What we offer here is, hey, we're here to help you sort through that choice. We're not here to tell you what to do. This happened yesterday. Client called, taking his first loan. Why was a variable checked on the form? All right, let's just talk through it, and then you decide. And so that's just part of the coaching we offer, and that's part of the fun that we get to have.